In this video, we will see what exactly is the MACD indicator. Also, what kind of signals does it give us? What are the pros and cons? And we will find out how to catch a trend from the very beginning. And last but not least, we are going to see how you can build a strategy based on this indicator. And for everybody who watches this video until the end, there will be a specific trade with entry, stop loss, and take profit. So let's begin now. In this channel, we will upload more educational videos like this one, so make sure to subscribe and ring the notification bell so you don't miss out any of our future content. Now let's see what exactly is the MACD indicator, short for Moving Average Convergence Divergence. Once you load it on your platform, it comes up down here and this is what it looks like. Basically a histogram with this signal red line that is moving below and above the vertical lines. And this is basically what information the indicator gives us. Now in this video we won't be looking at the formula that this indicator is based on, but from the name itself you can see that it uses moving averages with different periods, as well as a histogram that shows us when price is overbought or oversold. What we need to know is not how exactly this indicator is created, but when does it give us a buying or selling signal. So let's carry on and look at some examples. One way to use this indicator is to look at the histogram. I mean, when it goes above the level 0, that means we should see market accelerating. As you can see here, the histogram is below 0 and it then comes up here. Then it comes below the 0 level and we see market with a downside move. Here again, same thing and the same market reaction. This is one way to use this indicator, but I wouldn't say the best way. However, you can use it for extra confirmation when opening a new position, but entering a trade based on the 0 level only is not suggested. Then also you can use the signal line as another way to enter. I mean, when the line goes over or below the histogram, that's also a buy or sell signal. And this time you get an earlier signal because when the histogram goes over the level 0, you see that we've already had a signal from the red line as it is below the histogram, which means a buy signal. But then we also see a sell signal without market actually going lower. Here we have a sell signal and market goes to the downside. And then again a buy signal and another sell signal. Although this line gives us a signal earlier and you could say it works fine, again I won't say that you should use this as your entry signal, but only as an extra confirmation, okay? And the third type of signal that MACD gives us is the divergence. This is a very common one for all oscillators, and it basically is when you see the price of this instrument going in the opposite direction of what the indicator shows you. As you can see here, price creating higher highs, but at the same time lower highs on the indicator. This means that this upside move is getting weaker and we could see a correction in price, or maybe even a reversal. Based on this divergence, we could make up a strategy and be able to catch a trend from the very beginning. And if there is actually a reversal, then to be able to hold until we get another signal in the opposite direction and close our trade. So before we see how to use the divergence, we are going to look at the pros and cons of this indicator. Now, what are the main advantages of the MACD indicator? on first place is because it gives us a signal that a certain move might be coming to an end. As you can see, with the help of divergence, we could spot a trend reversal before it has actually happened. This way we get an early signal for a possible reversal, and even though sometimes it's too early, still something that we could take advantage of. This means we can then close out our trades earlier if we have to, in case we get a reversal signal. And of course we can also open new trades in the opposite direction, trying to catch the trend reversal. So that's pretty much the main advantages of this indicator. Now let's see what are the disadvantages. Like every other indicator, this one isn't perfect either. The main issue is that if you're using all of the signals that I've mentioned, then you will get quite a lot of fake signals. You will notice that the line could be below or above the histogram, but then price won't complete the reversal. And also the histogram could move above and below zero, but not affect price in any way. That's why we have to filter out those fake signals and not enter every trade that the indicator presents to us. Another one is that those two are also lagging indicators. If we wait for the histogram to go below or above zero, then that reversal would have already happened. However, if we use the divergence, then we could actually get involved on time, before the move has already happened. Now, how can we use the MACD indicator in our strategy? Well, there's two options to apply it, and the first one is if we are trading with the trend. And then second one, obviously, if we're trading against the trend. Now, how do we use it when trading with the trend? When we have an uptrend and let's say we've got long positions, then as soon as we see different price levels between the chart and the indicator, we can use that as an early reversal signal and close out our trades, collecting profits early, or at least close out just a part of our position, but making sure that we are secured in case of a reversal. Another way is to move our stop loss, and that's when we don't want to close our trade, but at least to protect our capital. Then we will be moving our stop loss closer to price and expecting that with every higher high that market creates, there's a bigger chance for a possible reversal. And that way we can make as much profit as possible before getting stopped out. And another way is to make an entry on a lower time frame if we don't have a position prior to that. So let's say we are in an uptrend on a higher time frame and we want to get involved, then we can drop down to a lower time frame and look for reversal on the downtrend that we would have there, because right here in the pullback on the higher time frame there will be downtrend on a lower time frame, and that's where we will be looking for entry opportunities once it starts reversing. Now, once we find our entry point, we will be looking to place our targets and stop loss as if we're trading on the higher time frame, and then expect a continuation of the uptrend. Now, let's have a look at some examples. You open up a chart, then go to indicators, oscillators, and then choose the MACD. Before we load it on the chart, we're not going to change any of the parameters. Like I said, it comes up below the chart, right here. If you can't see the indicator very well, depending on your chart settings and the colors that you've chosen, you can then change the colors of the indicator. And what I usually do is to have my histogram thicker and to use a red color for my signal line. Also, I'm not really using the signal line, like we said, it gives us quite a lot of fake signals, right? And so that's why I would rather not have it, or if I just type in 1 here, then it will stick to the histogram. And that's fine, it could stay there as I'm not using it for my entries anyway. The main reason that I would use this indicator is to look for divergence by looking at the highs and the lows. And that's why I like to use those settings. But if you want to try out using the signal line as well, then you can leave it as it is by default. What we have here is price creating a high, it then makes a pullback and then creates another higher high, which again pullback and is followed by another high that closes pretty much at the same level as this previous one. Now this by itself, it shows that this upside move is getting weaker. But if you look at the indicator down here, we've also got a high and then we have a lower high. So the opposite of what we see here on the chart. And this right here is what we call divergence. Now at this point, if let's say, like I said, we are trading with the trend, say that we managed to get an early entry in a long position from down here or anywhere here. Now we are currently running into profit, and as soon as we see this divergence signal from the indicator, that means we now have a signal that this upside move might be coming to an end and possibly maybe even a reversal. So at this point we could either close our full position or maybe just a part of it, because we want to secure profits in case there is a reversal. And to be honest, in some cases it would be much better to close your position right here rather than waiting for that pullback and then for price to come up all the way up here again at this same level, where again we have another divergence signal. So this is definitely one way how to use the indicator when we are trading with the trend. Another way is to move our stop loss and lock in more and more profit as price continues to the upside. Because since we have a signal for a trend reversal, we might not want to close our trade. Let's say we could have a long-term expectations for this upside move. So that's why we are not trading based on the indicator only, but we are still considering its signals. So if we have a trade here and we see then that we have a divergence signal, we could then move our stop loss below every higher low that price creates. That way, once the reversal actually happens, we will have collected as much profit as possible on this last upside move. And there's also another way how to use the MACD indicator to help us with our trend trading strategy. Now let's say we are in this upside move here, but we do not have any positions prior to that, and so we are looking for an opportunity to go long, like I said, to go in the direction of the trend. Now we could use the indicator to give us an entry signal. We have this upside impulse and then we have a pullback. Now on the pullback we want to find a valid entry signal which we could look for on a lower time frame. So I'm just going to put this piece of price action here into a rectangle zone so we can find out easier once we drop down to a lower chart. And if we're currently looking at the 4-hour chart, I'm just going to go down to the hourly chart and see what signals does the indicator give us there. So if we go back to this moment in time, right here, let me just zoom in so we can see that even better. Like I said, this is our initial impulse. Price then holds sideways for a little bit. It then makes a pullback. Now on this pullback here, what we see is that we have a low followed by a lower low, right? But right here on the indicator, we have this low and then we have slightly higher low, or even if it is the same level, then that's also considered a divergence. However, a stronger divergence is when we have low followed by a higher low in this case. So this by itself is a buy signal. And so we could make our entry right here on this reversal candle. But once we get involved in a trade like this one, and our idea is to trade with the trend on the higher time frame, well, that means you will have to use the stop loss and the target from the higher time frame. So if we're going to be entering right here, the best option is to place your stop loss below this low, as if you're trading on the 4-hour time frame, and therefore look for targets again as if you're trading on the 4-hour time frame. And of course, there's another way which is quite aggressive, and that's to place your stop loss below this market structure here. So basically below the reversal candle. But that means you will be trading against the trend on the higher time frame, but with the trend on the lower time frame. So as you can see, there's multiple options on how to trade a certain situation, and that totally depends on you and your free time. Because let's say if you will be using this more aggressive entry with a stop loss below the reversal candle, then that means many times price will make an additional pullback that will take you out, and so you will have to look for another entry signal. Therefore, you will have to spend more time on the chart. In this case, market continues up straight away, which is great. You go into profit, but like I said, there will be times where price might leave a long wick to the downside or make another lower low before it actually continues. And that totally depends on you, like I said, and your style of trading. Okay, so basically I've just showed you a couple of ways how to trade using the MACD indicator when you are trading with the trend. And this is something that you have to test out for yourself and see which one works better for you. Now let's see another way how to apply MACD in our trading. Because there are people using this indicator with the purpose of catching this whole trend from its beginning all the way until the end of the move. That means they are only looking for divergency and waiting for an entry signal to go against the trend. And if you will be doing this, then there's two very important things that you have to pay attention to. And I'm talking about win rate and risk to reward ratio. Now, if you're not familiar with those two and you don't apply them correctly, then you won't be able to make consistent profits when trading divergences and against the trend as well. So what do I mean by that? When we are trading against the trend, usually our win rate is significantly lower compared to when we're trading with the trend. That means that if we have 10 trades, most probably 6, 7 or maybe even 8 trades could be losers. Therefore, in those 2, 3 or 4 successful trades, we must make more profit and make up for those losses. That means we should be looking for a greater risk to reward ratio. Now, if we're looking for a risk to reward ratio of 1 to 1 when trading against the trend, well then that's not going to be enough. This chart shows us what risk to reward ratio we would need depending on our win rate. Something that I used to do before and something that a lot of people I see doing now is to not consider this important. So basically you're going to be looking to enter a trade, let's say down here. Stay in this trade all the way up here, and once you have a trend reversal again, to hop on in the opposite direction. This is possible, but it doesn't happen that often. Because counter-trend traders are waiting for a certain move to get weaker, but sometimes the market could continue in the same direction for a very long time. More than what we can afford. I mean, what people tend to do is to look for those reversal moments, and when they're using an indicator like this one or any other of this type, then they make an entry and price goes in their favor, but then makes a pullback and hits their stop loss. Then they get another signal, they make another entry, and they get the same result. And that could happen over and over again. And imagine that you've had multiple losing positions, and then you get another entry signal. If you enter, As soon as price comes a bit lower, you will collect profits immediately. But then that could be the moment when the trend actually reverses. And that's why I said you have to consider both win rate and risk to reward ratio. Because if we enter each one of those trades, as you saw, we could have 2, 3, or maybe even 4 losing trades. But then once we actually catch a trend reversal, we will be able to make up for those losing positions prior to that. But then there's something else. A lot of people won't be able to deal with this kind of psychology. I mean, they will see that they've been stopped out a few times in a row and they won't enter again, but pick another pair instead where usually the same will happen. And also, even if they manage to get involved at the right time, they won't be confident enough to hold this trade until the end, and therefore they won't be able to make up for those losses. So you have to think about win rate and risk to reward ratio. You have to backtest your strategy and see how many of your trades would be successful using your entry and exit techniques, and see what risk to reward you can look for in future if you will be trading this same strategy. For example, you are looking for trend reversal opportunities, you have to be ready to lose a few positions before you actually get a major winner. Also, do not enter on the first couple of signals that the indicator gives you, because like we said many times, there will be fake signals before the valid one. And you can be looking at the higher time frames for extra confirmation. That way you will filter out those bad signals. Here we saw that on the hourly and the 4-hour charts we had divergence. But looking at the daily, there isn't one, right? So look at the higher time frames as well, and not only the one that you're trading on. I'm not advising you to make an entry only based on MACD, because me personally, I like to trade with the trend, and that's how I would use it. When counter trend trading, you should know that there will be many times where the indicator will give you a signal, but the market will continue without reversing. That's why you must use a stop loss every time and exit your trades and then wait for another signal. Because you don't want to be in a trade in the opposite direction without knowing for how long this move will continue. Like I said, it could go on for a very long time. So always use a stop loss and wait for the next signal from the MACD. But like I said, there could be a few hundred pips move before you get another signal. And obviously, if you don't have a stop loss, you won't be able to take such a loss. You have to be aware of that before you even start trading against the trend. Although you would have consecutive losses, you will have to take every entry, because the indicator tells you that there will be a reversal, and that's exactly what you're looking for. But you never know when exactly it will happen, so that's why you have to take every opportunity that the indicator gives you. You don't want to be one of those people that made an entry right here, and by the time the reversal begins, they either lost their capital or are looking at opportunities on another instrument because they think there's no point to wait for another entry here. When you are trading against the trend, then you have to decide what kind of a move do you expect. If you're looking for a quick trade, let's say a retracement to the 23.6 level, then that's fine. But if you will be looking for a major trend reversal, then you have to be prepared to wait for a long time. Now, let's have a look at the specific trade that I've told you about in the beginning of the video. We are going to be looking at dollar Canadian, and first we're going to go to the chart, see what the situation is, and then we're going to come back and talk about the exact entry and exit levels. Right, so this is the 4-hour chart. What we see here is price in a strong downside trend, creating lower lows right here in this last bit. What we see though on the indicator is higher lows. So again, what do we have? A divergence. Then if I switch over to the daily chart, again, even though price is continuing the downside move, we can see that the indicator is now reversing back to the upside. But then if I go to weekly chart, we have this downside move, which as you can see has been going on for a while, and so that's what we have down here on the MACD as well. So we basically do not have a divergence here. But if you look at the current price levels, as you can see, we've had lows here in 2017, so over a couple of years ago, but basically we are currently trading below these lows. So if we look at past price action, we can see that we've had previous lows lower than the current price levels back in 2015, few years back. And right here, if you drop down to a lower time frame, you can find this support level, which is at the 1.1950 level. So what we can do is, again, to go down to the 4-hour chart and wait for price to reach this 1.1950 level. And also what we want to see then is the indicator basically having a divergence. So that would be our entry signal, and that is what the trade is based on. Of course, we will be watching how price will react once it comes down here. But what we can do then is to enter a position and place a stop loss. If we go back to weekly, place a stop loss below the 1950 level and actually give it a bit extra space just for security. That means our stop loss would be below the wicks from this low that happened in 2015. And that should be enough to keep us safe if our trade idea is right and price will reverse back to the upside. Then if we do get a reversal from this level down here, we're going to be looking at targets right around here in this zone where we have previous structure. Depending on price action and the way it gets there, if we have a strong impulse, we might actually look for targets back at this previous market structure. So again, once price comes down to the 1.20 level, we are going to be looking if there will be a breakout and if market will actually reach the 1.1950 level, and then we have to look if we have a valid signal from the MACD indicator. And now let's have a look at the exact entry and exit levels. Basically, we are going to be doing this with a pending order. We're going to place a buy limit at the 1.1950 level, stop loss like we said below the wicks on weekly chart at the 1.1850 level, and our take profit is going to be at 1.2250. We are also going to use a trailing stop of 100 pips, because if price bounce off our entry level and it goes up by 100 pips and then goes back all the way back to our entry level, we don't want to go into a loss in a trade that we were right. So if it makes such a pullback, we then want to get out at break even. And the trailing stop loss is for those of you guys that are not able to look at the chart. Now this could be done manually as well, so if you have the chance to watch the charts at this time, then you don't have to use a trailing stop loss. Okay, so I think that's a great opportunity. We will see if our entry will be completed, but the progress on this trade and other trading opportunities you can see in our free Telegram channel, and there will be a link in the description of this video. Also, if you like this video, make sure to subscribe to our channel, give us a like, comment down below if you want to see more educational content from us. So that's all for now. I wish you guys a successful trading. Take care, and I'll see you in the next one. Thanks for watching. Please don't forget to watch our last 2 videos where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.